Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day. It's May, excuse me. I'm getting behind myself. May 4th here, and we got a lot of data to go over today, so we're just going to jump right into it. And we'll start off with the ADP employment. This is kind of our prelude to the Bureau of Labor Statistics numbers on Friday, and then tomorrow we'll have the weekly jobs numbers. But we had 194. It was actually initially 200,000 new jobs created back in March, but it was actually reduced to 194,000. A lot of people thought the number was going to hit 200,000 this month, but actually it came in much lower than they anticipated at 156. So it came in very disappointing here, the ADP employment. This will be important because this will help gauge as to if it helps them kind of get a feel for what the numbers will be on Friday. This isn't exactly part because sometimes it does fall completely opposite of where we get, but investors like to get a comfort level of what to expect come Friday. Trade deficit did improve, however. That's one of the bright news. We had a $47 billion deficit back in February, and the forecast was supposed to be $40.5 billion, and it came at $40.4 billion. So basically right in line with expectations. And productivity for the first quarter improved a little bit, but still obviously in contraction mode. It pulled back or down for the quarter here. So we had a previous reporting came in at negative 1.7%. It was supposed to kind of stay in that same range at 1.6%, and it actually came in lower at 1%. So again, it's still down, but not as bad as we initially thought. Unit labor costs went up. So we had 2.7% in the previous quarter, 3.3 is the forecast, and came in at 4.1. This is something to keep an eye on because obviously this could be inflationary numbers here, and that's could help drive inflation up a bit. ISM non-manufacturing, also known as ISM services. So this is more service industry versus what we've been talking about with the manufacturing. So anything above 50 is considered a expansion territory. So we've been seeing that here, as you can see. Back in March, we had a 54.5, and it was supposed to be kind of that same range at 54.7 for April, and it jumped up another 1% at 55.7. So service industry is still showing some positive results here. Shows that our economy, what we're seeing here with factory orders is the last one. February was a negative. It pulled back at negative 1.9%. The forecast was supposed to go up to 0.8%, and actually jumped up a little bit higher at 1.1%. So overall, we got a little bit mixed bag of news. It's showing that the economy is growing, but not obviously at a pace as we like to. We're still going at a very slow snail pace here. So this is what's kind of showing us what the factory orders, productivity is gone up as a little bit better, but still not quite there. Unit costs could help bring up inflation. Service industry has picked up a little bit, but of course the job numbers aren't quite there yet. Right now the stock market's down, so based off a lot of those numbers, especially on the jobs numbers, what concerns them the most. But it did reduce the Fed funds index from about 25% down to about 16% for Fed to raise rates in the next June, which will be the June meeting here. On there. Also, we got earnings reports coming out here, so it's been kind of one of those mornings for the stock market, especially after yesterday, which dropped quite a bit here. However, on the bond market, we had a nice little rally yesterday. We did close above that last resistance R2, as you can see there. Today, we're down about 3 basis points from where we left off, so it's really no difference in pricing. As you see, it's starting to get a start effect, so we were up a little bit more. We were even down touching off the floor. Now, if we can close above this second resistance, this will become a floor of support for us. So it'll help us keep the interest rates on track of improving over the course here. So today will be kind of important in this area to see if we can keep on track with better rates here. But today we're about the same as where we left off yesterday for interest rates. All right, folks, thanks so much for watching. I hope you guys have a wonderful rest of your day here, and we'll see you guys tomorrow. Tomorrow, remember, we'll have the weekly jobless claims. Bye-bye.